In today's video, I want to introduce a new indicator on TradingView that gives exact reversal signals. To add this amazing indicator to our chart, here we click on indicators and we search RSI ATR range. This one, which is written by someone named Steves. Alright, this is the indicator, and as you can see, is added here below the chart. As the name of the indicator is indicating, it's a mix of RSI and ATR. Actually, it gives you the ATR ranges associated with the current RSI value, and this helps you to view RSI in a different way. Instead of overbought or oversold, it helps you to know if the market is likely to be bullish, bearish, and also it gives you reversal signals. Bull ranges are displayed in green color and bear ranges are displayed in red color. So when the indicator is green, we know that we have bullish RSI range, and when it is red, we have bearish RSI range. Besides this, we have also RSI bar chart here, scaled from 0 to 100, and it also shows the status of RSI range for the current price condition. When it is red, it shows bearish ranges, and when it is green, it shows bullish ranges. But the more interesting signal that we have with this indicator is reversal signals. When we have a huge spike in the indicator, it gives the possibility to an imminent reversal. The indicator also shows these gray circles when we have relatively higher levels, but our focus should be on the times that the spike is really large, because this is a higher probability signal for reversal, like this one that we have here, which is a huge spike and we got downside reversal after that. But for example, for this one, although it is relatively high, but after that we had just a small declining of the price, which is in the form of a pullback before further advancing of the price, as you can see. So our focus should be on the spikes that are really large. Deciding on what level is considered larger, it depends on the volatility of the asset you're trading and also the time frame of your chart. For example, in forex market and for major pairs and for the time frame like 1 hour time frame, by a little examining of past data, it is obvious that levels like 0.003 are considered huge. So we can draw a horizontal line here at 0.003 level, so we can easily track large spikes that are formed on this indicator. For example, for this one, you can see that it was higher than 0.003, and after that we got a reversal. Or for another example here, for this one here, you can see that the spike is really large, and after that we got a reversal. Or another example we have here, which we had a large spike, and after that we got a reversal. And please pay attention that these are just probabilities that maybe a reversal can happen. When we get a spike above this level, it just gives us a signal that probably we are going to have a reversal. It is not an immediate signal that you should take action now. It's just giving us an alert. So for example, if you are in an open position here, in an open long position, when you have a signal like this, you can exit your long position and take your profit, or reduce your position and take part of your profit before having more confirmation for the reversal and totally closing your position. And on the other hand, this can also provide you an opportunity for opening a short position. For more confirmation and finding a perfect entry point, we need to add another indicator. So here we click on indicators and we search Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. Alright, this is the indicator, and if you know it, it's a powerful indicator for identifying trending and non-trending markets. When the green line is above the orange line, it shows that the market is trending up, and when the red line is above the orange line, it shows that the market is trending down, and when the orange line is above the other two, it shows flat market. To use this indicator in conjunction with reversal signals of this indicator, we look for the signs that the uptrend or downtrend is probably ending. For example, here, following this advancing of the price, here in Andean oscillator, the green line is above the orange line, showing advancing of the price, and then here we got a reversal signal, and when the green line crosses below the orange line, we can say that this uptrend is probably ending, and for now we are flat. Having a reversal signal from this indicator and then having the green line going below the orange line further confirms that the prior uptrend ended, and probably we are going to have a reversal. Let's move back on the chart to show you another example here. Following this downtrend, you can see that we got a very huge spike here, which is far above the 0.003 level. This situation gives us the possibility that this downtrend is probably ending, and maybe we get a reversal to an uptrend. When we check Andean oscillator, we can see that red line is above the orange line here, and then it went below the orange line at this point, and this gives us the signal that the prior downtrend is weakening weakening, and for now we are flat, and later we can have an upside reversal. Please pay attention that this is an early signal, and as long as the orange line is on the top, the market is in a trading range, and it can turn to an extended trading range like our case here. So a more conservative and lower risk entry point could be here when the green line crosses above the orange line, and this is the point we are seeing considerable upside momentum. So this could be a lower risk trade entry with the stop loss below the range, and you can see how the price turned to an uptrend after that. Let's move back on the chart to show you another example here. Here you can see that we got a large spike above 0.003 level, and this is happening following this advancing of the price, and this gives us the possibility that we are going to have a reversal soon. And in Andean oscillator, you can see that we have green line above the orange line, and then it went below the orange line at this point. This is an early signal that the prior trend ended, and maybe we will have a reversal. A lower risk trade entry would be here, where the red line crosses above the orange line, which shows that the price is in a downtrend, and you can see how the price declined after that. Please pay attention that based on my experiments, I didn't find this indicator very suitable for short time frames like 1 minute or 5 minutes, because there in those time frames we have more noises on the chart and it causes to have many false reversal signals. But for time frames like 1 hour or higher, it works very well. But this doesn't mean you cannot use this indicator when you're trading on 1 minute or 15 minutes time frame, because you still need to know about the overall trend of the market and any reversal that is happening in the market. So this indicator can be used for any types of trading, whether it's day trading or swing trading. Let's go to 4 hours time frame and see how it performs on 4 hours time frame. The method that I explained can be applied here similarly. For example, here you can see that following this downtrend, we got a large spike here, and this gives the possibility that maybe we will have a reversal. And here in Andean oscillator, you can see that the red line is above the orange line, and then it went below the orange line at this point, which shows that the prior downtrend is weakening and we are flat now. So an early signal would be here at this point, and a later and lower risk trade entry would be here when the green line crosses above the orange line. You can see how the price turned to an uptrend after this signal. Let's move back on the chart and check another example here. Following this uptrend, you can see that we got a large spike at this point, and in Andean oscillator the green line is above the orange line, but before having the green line going below the orange line, we got another spike, which gives even more probability that maybe we are going to have a reversal. And at this point, the green line went below the orange line, which is an early signal, and a later and lower risk trade entry would be here when the red line crossed above the orange line. Please pay attention that I always use the word probably, that probably a reversal is going to happen, because in trading nothing is certain and we are dealing with probabilities. When we have a signal like this, and even with confirmation of this indicator, these are just probabilities, and a reversal can happen or may not happen because the market is affected by many factors and it can suddenly move in an unexpected way depending on the market conditions or expectations of the market participants. So risk management plays an important role to protect your trading account and to become a successful trader. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.